All right. Welcome, welcome, everyone. I'll give it a second. We still got people entering. Awesome. Hello, everybody, and welcome to Eye on ESI. I am Maribel Rivera, Vice President of Strategy and Client Engagement at ACEDS. I am joined today by Jared Coseglia of TRU Staffing Partners. Jared is the founder and CEO and an industry expert. Also joined by Michael Quartararo, our president, who heads up not just ACEDS, but also works closely on professional development within ACEDS and the Barbary realm. Today, I want to talk a little bit, I'm going to just kick it off first, just to talk about Eye on ESI. If you've joined us in the past, just to share with you, we're changing the whole format up just because of the high demand all of you have given us feedback on, saying, hey, we want more of this. We've got more questions. We want to know more. And this comes from a lot of different things that are happening in the industry. So Eye on ESI will happen every month going forward. It will be now a 30-minute format instead of 1 hour of us giving you everything once a quarter. So very exciting that I'll be joined with Jared and Mike on a monthly basis, just to share with you what's going on for careers and professional development for each of you and what we're seeing as far as at ACEDS and TRU in the industry at large. I want to get started. Hi, Mike and Jared.
Hi, everyone.
Hi, everyone.
I want to get started. I just want to touch on, I was reading some stats after we did some prep for this session, and some of the stats that I came across were basically that Global Newswire stated that we were projected to go from a legal industry that was at $713.12 billion to 788.94% billion in 2022. So that's substantial growth in a year, in a 12-month time frame. And I think we're seeing also, because of everything in our industry as far as e-discovery and the adjacent areas, huge amount of growth, right, for the workforce. So Jared, do you want to just touch on some of that? And I know we've changed some things today too to help with some of these things.
Yeah, it's growth, but it's also inflation too, right? I mean, we've seen salaries go up almost 22 to 30% at the point of hire over the last 18 months. And that really hasn't changed, despite some other things changing as the economy moves from the hottest job market we've ever seen in 20 years to a potential recession looming in 2023. I think also the growth is indicative of e-discovery companies taking more business and also doing things that they weren't doing a few years ago in terms of the kinds of projects and the kinds of matters that they're getting involved with. It's not just pure litigation anymore. It's breach, it's PII review. It's a lot of other things that weren't really part of the financial ecosystem 2, 3, and certainly not 5 years ago. But it's also because lawyers are charging more money, project managers are costing and charging more money, and all of that is going to bring the growth of the industry up.
Excellent. Mike, any thoughts?
No, I mean, I completely agree. And obviously the growth, and there's some other industry growth metrics you can look at, research and markets, Gartner, all those things. You guys can just Google these things. They give you a summary, even if you don't buy the really expensive reports, but everyone seems to be projecting growth in e-discovery specifically. Jared could probably speak to privacy and cyber, but I stay focused on e-discovery because that's where I live.
Yeah, and e-discovery people are getting involved in privacy and cyber projects, right? They're not compartmentalized maybe the way they were before, and a lot of those are downstream document review type of projects that require project management at the early onset and then full life cycle kind of review workflows. The thing that I think that is really interesting, and you all see the slide here of speed of hire, and I know we're only doing 30 minutes, so I'm going to keep it moving. There are 3 metrics we're going to promise to give everybody that joins these every single month. So if you're a hiring manager or you're a job seeker, whether you're a passive hiring manager or an active one, passive job seeker or active one, you can count on us giving you these 3 things every month. The first is speed of hire. The second will be compensation. And the third will be the workforce evolution, which talks about remote and contract versus full-time hiring. Let's talk about speed of hire though, because this is the one that's changed the most in the last 90 days. So when you go back and look at the post-pandemic 2021, we've never seen anything move so fast. And for those of you who have seen me speak before, you know that the reason why things move so fast is because we were interviewing virtually for the first time 100%. 100% of first round interviews through all of our clients and TRU staffing partners, no matter what industry or vertical or job role they are interviewing for, are virtual. This was not the case in 2019. This is a radical shift in how we engage in looking for jobs and looking to hire talent. So the timeline here for a non-contract mid-market e-discovery professional was 8 to 12 business days. It was really, really short. You had to essentially respond to a resume the day it was sent, interview the person the next day, and usher them through the process as quickly as possible just to compete on timeline. In Q1 and Q2 of 2022, it slowed down a little bit, but not that much. It extended to 12 to 14 days. And now what we're seeing currently since the end of Q2 to the where we are now, which is like middle of Q3, it's about 20 to 30 days. Now, here's what's really important about that, because there is some differentiation between law firms and vendors. And it also is a differentiation between those that get the candidate they make the offer to first and those that don't. So if you make an offer to a candidate and they reject it, you're probably going to go through another 20-day cycle potentially before you're going to get your second candidate. So if some of you are out there saying, hey, listen, 20 to 30 days, man, I'm on day 90, I'm on day 100. I would probably say, well, how many candidates have you made offers to that declined or rejected your offer or didn't get to make an offer because they went off the market before you could make an offer? That's why this speed of hire is so important, because that's why you have to make decisions in the timeline that the people that are fighting over the same talent are making decisions. And while it's extended for most jobs, which are full-time, non-contract, mid-market, those are people making somewhere between $80,000 and $150,000 a year, it's less than a month. For contract employees, it's extended a little bit to 2 weeks, but that's still rapid pace compared to 2019, where we were seeing things much longer. And executive hasn't really changed. And the reason for that is when we get executive roles, they are rare in e-discovery. The amount of jobs available at $250,000 to $500,000 a year are few and far between. So when those jobs open up, there are generally very qualified people ready and willing to take those opportunities, and the cycles happen faster because they don't bring them into an office for any of the interviews. Maybe the last one for executives, but generally speaking, 90% of subsequent interviews after a first interview through our organization are 100% virtual.
Hey, Jared, quick question. What, in your opinion, accounts for the change here? Obviously, the speed of hire is getting a little slower. What's causing that? Just so everyone has the context.
It's a great question.
I want to ask us, in addition to that, since we're going to dig into that, I do want to ask, because I had this conversation yesterday with some friends in the industry, in legal overall, and there is now becoming more and more, and we saw this with Goldman Sachs this week, right? Demanding that you are in the office 5 days a week or a specific amount of time a week. And a number of people basically resigned from their jobs. So in addition to Mike's question, let's talk about that a little bit as well.
Yeah, so the reason why it slowed down in the last 90 days is largely because it was summer. People were going on vacation. It's been harder to lock people down for interviews, both candidates and customers. So there's your extra 5 to 7 business days that grew this out. A lot of it had to do with summer and vacations. I think more people took vacation in the last 90 days than probably, and I mean vacation like travel, I'm going away vacation, than they have in the last 18 to 24 months. So that's one factor. The second factor is the hiring managers are slowing things down a little bit. And part of that is because they're trying to gather enough people to make a decision on a hire in the first wave of interviewing candidates, as opposed to here's one, and then I'll leave this person on the bench for a week or two while I look for another, and then I'll come back to. They don't have that luxury, so they're hoarding their process for a few extra days getting everybody lined up and then pushing everybody through the process that they're interested in all at the same time, because they know if they don't, they'll lose the person that they put on the bench while they're exploring somebody that might be better. And they've recalibrated in order to compete. And generally, that's extended the timeline by, a week or two. I think we're going to see the timeline speed back up again. That's my prediction. I think
I was going to ask you to prognosticate a little bit and say, through the fall and into the beginning of winter, how does it look? But
the pressure to fill whatever full-time headcount that somebody has approval to spend before the end of the fiscal year, many of whom end in October, some end on the calendar end, is going to be greater than my need to shop around, because people are afraid they're going to lose their headcount. People are afraid they're going to lose candidates to other people that are moving faster. And I think we're going to see things pick back up to about a 12 to 15 day cycle from the time. And that cycle is based on the time we send a resume to the time someone receives a verbal job offer. So that's what that window of time is. And I think we'll see it pick back up. To Maribel's question, we'll unpack that a little bit in a second on the workforce evolution slide. But I can say categorically that if you're making people come back to an office, you're likely not going to get A, your first choice, or B, necessarily the best talent that the market has to offer. 50+% of job seekers are motivated by having the flexibility to work from home. There is a lot of overlap for people that are willing to come in 2 to 3 days a week, but the difference between people willing to come in 2 and people willing to come in 3 is pretty big, and a lot less people are willing to come in 3. So I think those organizations might see their timeline extend because they're not able to find enough candidates that are qualified and still willing to come into the office.
And to build on the vacation piece, one of the things I did see also is not just that employees were taking the time off, but that employers were kind of saying, hey, you need to take, especially with the increase in wellness, corporate wellness, we're starting to see more and more companies saying, you need to take your time off, you need to take vacation. And there's mandatory, right, from the companies to say time off is required. And this is a health and well-being. And
I think that's a corporate trend in America. I think it affects e-discovery very, very, very little. I think most e-discovery jobs are not, I know most e-discovery jobs are at vendors and law firms and not at corporations. That's about 10%, if that, of the marketplace. So corporations that are infusing that into their culture are rarer in the e-discovery space. I think most e-discovery vendors and law firms are understaffed and overworked right now. And we're kind of back to the opposite issue, which is burnout.
I love watching this go like this. It's fascinating to me. It's just fascinating.
But that's why we're doing it every month, right, guys? Yeah. Because it changes so fast, right? Like what was happening in April, May, and June is not what the market is now. And, we're starting to see that in this compensation metric. So we're going to go through this quickly because there's 2 of them. There's law firms and then there's vendors. And what you're going to see here is the main thing to look at here is what project managers are making right now. That's really where the, closer to 30 to 40% shift in compensation from a few years ago has occurred. Most law firms are paying between 150 and 175, maybe even a little bit more if they're a top 50 AM law for a really strong senior project manager. Most law firms are looking at 110 to 140, and they're really struggling to find people in that range that are willing to come into an office, because there are plenty of other opportunities at vendors and at other law firms where you don't have to come into an office at all, and we're going to pay you the same, if not more, in compensation. So e-discovery project managers are the hottest in-demand job in the marketplace right now. The turnover rate is extreme at all levels, law firm and vendor. And those are the individuals that are getting compensated the most, so much so, and this is an interesting kind of sidebar that we talked about in our prep, the staff attorney role for e-discovery is actually starting to pay less than what an experienced senior e-discovery project manager makes. So, you ask the age-old question, does having a JD increase my value? And right now, experience as a technical e-discovery project manager trumps having a JD in terms of the value to your compensation. Let's look at the vendor one so everyone can see that one.
Yeah, I'm curious about this one.
Yeah, so when we look at service providers, you'll notice that we put a lot of different roles because at service providers, they have a much wider ecosystem and a greater diversity and compartmentalization of responsibilities. And so that'll also affect the compensation. What you'll see here that's probably most striking is that the price for project managers is not that much lower at vendors than it is at law firms. And that used to be a chasm 5-6 years ago, right? It was, a 50% chasm sometimes, which is why everyone wanted to go work at law firms. But vendors have been very wise to compensate employees with the ability to have flexible work from home lifestyles in exchange for $10,000 to $5,000 a year in comp. And that's worked. And we've seen people take a little bit less in comp that are at law firms for a little bit of quality of life. And that doesn't necessarily mean hours, though sometimes it does. But it means having flexibility that you're in control of as the candidate in terms of when you want to come into an office and when you want to work from home. The other thing I think that's really, sorry, go ahead.
No, I was going to gloat a little bit and say, all proving my theory that project management's the most valuable part of this process.
It's the most valuable asset in a billable revenue generating litigation support department or at a vendor. It is
a lot of the software, some of the processes, things are becoming commoditized and systematized, right? But that good collaborative, consultative expert, that's the money.
100%, but they've still got to be hands-on. They still got to be willing to get in there and deal with data. They still got to be massaging the database. That doesn't mean they're all processing data or running their own productions, but it does mean that they're consulting on workflows. They're troubleshooting exception reports. They're knowing how to QC the data of their subordinates. All of that is part of the people that are making the top end of that salary. I will say that what we're really seeing a big uptick in terms of compensation are review managers. The amount of reviews happening have gone way up. And I think that's probably why the GDP has gone up on legal. And also the analytics overlay. We don't see many jobs like that, but when we do, where the job is not managing cases full life cycle, but rather sitting on top of lots of cases or a department and being the analytics expert, everyone is now expecting analytics as part of their service offering when they go to vendors or to law firms. And so having that, if you're a review manager, or if you're a project manager, or if you're an analyst, is one of, if not the most beneficial thing to get your salary to the higher end of that range.
Hey, Jared, great question in the chat. Sorry to interrupt, but anything on government and nonprofit? Do you have any thoughts on those?
Yeah, you're not going to like them. I think they are.
I knew we wouldn't.
Completely out of touch. I think they have no ability to recalibrate to a post-pandemic economy. And one of my clients knows this because I told them yesterday we could not help them anymore because the price range that they're looking for a project manager is completely unrealistic. Those jobs won't get filled with the same caliber of talent as jobs inside the private sector. They don't stand.
Is it fair to say, Jared, when it comes to government, it's take it or leave it for an employee?
Yes.
Yeah, that's been my sense too.
And it doesn't matter what the job experience is, it's still extremely low.
Yeah, I mean, I think that the government agencies are going to have to lower their expectations in terms of the caliber of talent that they're going to get for the price point that they're willing to pay. Yes. Which could be great for some people to break in and get really great experience. Working in a government can be great, but it is not going to be lucrative.
No, so it's good entry level, junior level for someone.
If these government agencies would hire those people, but they're very stubborn. They want the same caliber talent that that outside counsel and that vendors are getting, and they have not really accepted reality, if you want my honest opinion.
Yeah.
Good benefits though.
Sure.
Awesome benefits. Talk about workforce evolution. Going back to some of the things that we've already touched on, but let's dig in deeper.
Yeah, so what's really fascinating here is the amount of remote work. So you'll see in 2021, 77% of the jobs were fully remote. And that has not changed that much. I'd say it's probably down to like maybe the high 60s like it was in 2020. Some people in 2020, before the pandemic started, were still hiring in an office. We had a whole quarter before the pandemic happened. That's why that number is 68 and not 100. But as we look to 2022, what we found is it's somewhere in between those two numbers. It's still about 68 to 77% of all jobs are almost fully remote in e-discovery that are getting filled, right? Remember, these are total placements. These are jobs that actually get filled, where a body shows up and starts a job. And I think what a lot of law firms in particular are experiencing is a much longer hiring cycle because they're not getting the first 2 to 4 candidates that they're interested in, because either somebody else moves faster or they take a job where they don't have to come into an office. And so what we anticipate will happen is a little bit of a balancing out. We are starting to see candidates be a little more willing to compromise on that particular issue in order to get things like increased compensation. And as you saw, we are seeing compensation, particularly for PMs at law firms, going up significantly in order to counteract this issue specifically. On the contract side, you'll notice that in 2021, contract staffing dipped back to its 2019 low, right? So almost 34% of them, but still 1 out of every 3 jobs. Having said that, the reason why in 2020 was so high is because nobody had the permission to hire anybody full-time for almost 6 months. When they needed something, they hired contractors to get things done and then either converted them later on or phased them out, or they're still on payroll as a contractor, which is the case with a lot of people we put on payroll in the second and third quarter of 2020. What's going to happen is this pendulum is going to swing back the other way in 2023. And we're expecting north of 50% of net new e-discovery job openings to be contract job openings. And these aren't contract attorneys. We don't do that. We don't count that in these stats. These are project managers, analysts, consultants, the same list that you saw on the compensation report. That's who these professionals are. So what we believe is that pendulum is going to swing back. We're going to head back into a little mini recession, probably end of the fourth quarter, beginning of the first. It won't last long. We expect that to last like 2 to 4 months at most, and it's an air quote recession, right? It's a self-inflicted recession because people are being cautious about spend more than it is like people are not growing their top line. I think everybody's top line, as noted by the stats that Maribel gave at the beginning, are up. I mean, ours are. We're up 375% as a business since the pandemic. And it's not because we're just great at what we do. It's not just because the market is explosive, but it's because the job market always hits recession after the stock market and the general economy hits a recession. And we're seeing that in the US job numbers, right? This is the first week that we've seen them be a little bit lower than expectations. Generally, they've been beating expectations, despite the stock market being down, 25–30% for most of the Dow and NASDAQ. So what last thought, and then I know we got questions. What's amazing about this chart is that the pendulum used to swing over years, right? When you look at 2014 and you see how contract staffing kind of stayed steady and then it dipped down, 2019 was a strong economy, lots of full-time hiring, so not as many contractors potentially needed. 2020 pandemic, exact opposite, swings the other way. 2021, hot job market, everybody's hiring full-time, swings the other way. Guess what? We're going to swing back the other way. And here's what I would say to everybody about contract opportunities. These are your way in the door for opportunities where you may not be a 10 out of 10 on the skill sets and experiences that a hiring manager is looking for. So if you're looking to reinvent, or you're looking to get out of a law firm and into a corporation, or you're looking to get out of an individual contributor into a leadership role, looking at contract opportunities is a great way to help facilitate that transition. It gives everybody that, before you commit, you really try, and explore each other and make sure it's a fit, right? Make sure it's a fit before you commit. That's what my marketing department wants me to say. There you
The
go.
test drive.
There you go. Yeah.
What I find extremely interesting is how we've seen, because of technology, because the way that companies are refocusing how people need to work, right? That relocation has dropped over the years.
Yeah,
and you're
it's almost non-existent.
Yes. So that's an interesting factor too to see, is that talent.
But that money is going into your pocket, right? That's where it's going, because salaries are up 22 to 30% year over year at the point of hire. So all that money they spent saying, come be here, they're overpaying people, which for those of you making people come into an office is also disadvantaging. How are they making them work from home and paying them the same that we are or more? Well, because they're not moving people around anymore. They've taken that budget, reallocated to the worker, and that's what's getting it done.
Yeah.
Awesome. So I've got 2 questions so far. So I'm going to stop sharing and then go back to us. So question number one, which is in our chat, is what are the law firms vendors doing to keep their talent? So we talked a little bit about that, but let's talk some more about what are you seeing? What is everyone seeing? And Mike, I don't know if you've had discussions, but what are we seeing as far as how do you keep those people?
Yeah, it connects to the contract conversation. So the number one way that we found our customers are able to retain their existing employees is by enabling support in a contract capacity. They may not need somebody 40 hours a week, or they may not need another person on day shift. They may need somebody on second shift, but they're creating a layer of support for different kinds of tasks, generally project management, project coordination, and technical analyst work to support their full-time employees so that they can go home, so that they can have the commute off where they don't have to be responsive, so that they can take their kids to school in the middle of the afternoon. And having contractors that can step in and add value and plug and play into your workflow is enabling a higher quality of life. The number one reason why ediscovery people quit their jobs is for quality of life. And they're all chasing a place where they don't have to work 80 hours a week. May not always be possible, but there are other things that add into the quality of life equation. Work from home flexibility, support from contractors has been really successful in helping our customers retain their valuable full-time staff that has institutional knowledge that cannot be replaced.
Yeah. Mike, any thoughts?
I'm kind of old school on this issue. It used to be, we always used to say, and I think this has changed, so don't hold me to this. We always used to say, people don't leave a job, they leave a manager, right?
Yeah.
And I just don't think that's true anymore. And in the market we're currently in, the employee seems to have the upper hand. And they're making demands, reasonable or not. You can have your opinion. But I mean, to me, the sort of traditional ways we always kept people was by cultivating them, by keeping them interested and challenged, and fostering loyalty by not giving them things, but like I was always big budgeting on for training for my staff, for some to attend some conference where they could upskill, or those kinds of things.
Investing in the talent.
Yeah, investing in your people, that was the way. But I have to say, and Jared, you can correct me if I'm wrong, I think that's not true anymore. I think it's shifted.
I'm gonna disagree, but I'm gonna reverse engineer what you say to kind of draw attention to what the real problem is. The problem isn't that people don't want that anymore and aren't motivated by that, because they are. The problem is they've got nowhere to get it. The real problem with ediscovery at the end of the day, from a talent perspective, is there are no farming systems in this business.
Yeah.
You guys are keeping me very successful and very wealthy by never training anyone from the bottom up. You just keep coming back and saying, give me exactly what I had, but better, and I'll pay more money for it. And that's fine. We do that. That's how we make a living, but it is not a healthy ecosystem. And ediscovery is at a place where you are hard pressed to find somebody that's got the time, interest, or experience to really commit to mentoring as the primary motivation for getting you to come and work for them. Yeah. People are not dangling that carrot. And the ones who think they could offer it should start moving it to the front of their pitch when they talk to candidates, and they will find that that will motivate people, but very few people offer that.
So tell a candidate you're sitting across from, you're looking, you have your resume, you're talking to a candidate and say, there's opportunity here because you're coming in at this level, but 3-5 years from now, there'll be this for you.
Yeah. So
yeah, or I'll get you to these milestones, yeah. Right? I mean, that when I hire people on my recruitment staff, I mean, if you've met people that work on my staff, none of them did this before they got here. This is where you'll be after 2 years. This is where you'll be at 3. This is where I want to get you by the time you're 5. Here are different challenges you're going to experience as you mature and evolve, not only at my organization, but in the industry and in the industry ecosystem in general. And I just don't think many people have really thought through that sales pitch to candidates. So I don't think it's a candidate issue that they don't want that or aren't motivated. I think they don't think they can get it anywhere, and they don't know how to ask for it.
Yeah.
So we have a couple of questions, and we're at time, but I want to take these questions because they're important and I don't want to leave them till next time. But should we get training certifications on our own or ask our organizations for training certifications? Mike, I'm going to let you touch on that since you're at ACEDS.
Yeah, and it's, I mean, it's a mixed bag, right? So I think you should ask your organization to pay for it, and their response will tell you something, right? But don't let a no on that front be an obstacle to get it to upskilling, to investing in your own career. I mean, those are my thoughts. I want to say that we're probably at maybe a 50-50 where individuals versus organizations are paying for things, maybe. I don't, it's not a stat we technically track, month over month or anything like that, but that's my sense of where it is right now. There's absolutely no harm in asking.
Yeah.
Jared, your thoughts?
Oh, I agree. Always ask, but I'll leave you with this. People invest in people who invest in themselves. And
Fair
so
point.
the thing that's more important than the actual training is the initiative. And
Yeah.
that is your selling tool. Because
Yeah.
if somebody comes to me and say, I went out and I got it on my own, I mean, that's just so much about character and integrity. So whether you're looking for upward mobility, your existing employer, looking to change jobs, there's your leverage.
Yeah. So I will say I have these conversations daily with people, right? Just trying to understand motivations, listening to what they need. And some of what I see is that there are a lot of individuals with the initiative. They go out, they say, hey, I wanted to learn more. I want to understand what the program is, how much the cost is, all the information. They want to gather it all up. They will go to their managers and say, hey, I saw this program. I want to do this. Will the company pay for this? Quite often the company may go back and forth with, okay, let's see if there's budget. We might need to push it out. The other thing they may do is kind of see who else around them in the group might have interest. And it's if the group has interest, it's faster and easier for them to get the managers on board to give them the budget as a group to do it rather than just one-off person.
Well, let me throw one more thing in there, Maribel, that ties back to our contract conversation and our retention conversation. One of the best ways our clients have killed those two birds with one stone is with a contractor. If you bring someone in who's an analytics overlay as a contractor, and we've done this for a number of our vendors, we had a lot of people bought licenses for Brainspace and Reveal in the last 12 months, right? They've done really well at selling a lot of licenses, but they don't offer necessarily the kind of training and education to the people who are buying their licenses to ensure utilization will be exceptional in this new tool that they are licensing. You bring in a contractor who's an analytics overlay, that's a Brainspace guru, or is a relativity analytics guru, or is a disco analytics guru, whatever. And they come in and they're helping your clients, they're up-leveling your staff, and they're getting that training and education on the job that's applicable and billable to your clients, and you're killing like 3 birds with one stone. And that kind of talent is out there.
Yeah. So there is a question here with regards to training. If you do train someone from the bottom up, how do you keep them? So
You give them an opportunity to use what they trained on.
yeah,
Start there.
Agreed.
that's important. I think showing them the investment, having those conversations, right? Listening to what they need as far as career growth. Those are all important things to keep that talent.
Yes, and I'll say this too. Gen Zers like to reinvent a lot faster than Gen Xers, right? I'm very comfortable kind of staying in my zone and growing incrementally at this point in my career and at this point in my life. What I found with a lot of the younger people is they gobble it up, they get it, and they want to learn something new very quickly. And being able to cater to that will help you keep that new generation of talent around.
I'm excited then because I might not be a Gen Xer anymore. I might be a Gen Zer. Oh, all right. Last question.
Only person I know who gets younger.
Let's see, do I have final question we'll take, and I'll try and grab the other questions so we can touch on them during our next one. How does this data relate with eDisco professionals in a corporation setting?
Oof. Jared, you all day.
Yeah, so I mean, look, less than 10% of jobs out on the marketplace are at corporations, and most of those jobs are very entry to lower to mid-level jobs. They're largely focused on forensic collection and investigation work. They're largely focused on people who are doers and not necessarily strategic advisors. There are exceptions to this rule. Certainly practicing attorneys that come into in-house corporate as e-discovery counsel is a very different ball of wax. But for operations e-discovery professionals, do you want my honest opinion? It's a dead end job. Most of those jobs are doers. Most of the people that are looking to grow out of corporate e-discovery jobs are looking to move into vendors or law firms for accelerated growth, if for no other reason financial. Or they're leveraging that institutional knowledge and moving into risk, or moving into governance, or moving into data privacy, or moving into cybersecurity. Hey, they were a great in-house forensic digital examiner, and now they're going to move into incidents and deal with the security team and report to a CISO instead of an e-discovery manager or the legal office of the general counsel. Corporate e-discovery jobs that are net new on the marketplace are generally not for people that are looking for accelerated, rapid growth. That work is getting pushed out to vendors and law firms.
And I would only add one slightly disagreeing, but agree on the e-discovery side, but think about reinventing yourself as a legal ops professional.
Yeah.
Because that's where the corporate jobs are.
Yes.
But Mike, it's not where the money is.
No, agreed.
I'm sorry. I mean,
separate
look,
conversation.
Block is the shiniest, most elite kind of organization. They painted legal ops to look like the golden calf. But at the end of the day, most of those jobs got lost in the pandemic. Most of them are about cost reduction, not revenue generation. And I'm talking about corporate legal ops jobs, not law firm legal ops jobs.
Correct.
And I just think you're going to find e-discovery professionals who are unwilling to give up 20 to 50% of their compensation are going to be disappointed at what they can make making that kind of a transition.
That's a fair point, but there's a market for it.
Legal
ops is the market, not e-discovery in corporate.
So
Correct.
final, we got to close up. We're 7 minutes over time. Jared, any final thoughts?
I really appreciate everybody coming today. Come back. These stats will change by this time next month, and we'll continue to bring stats that are interesting to you. So let us know what you want to know. If there are certain things that you're really curious about, if there's statistics that you want trending on, we're happy to keep bringing that. We love ACEDS. If you're not certified in ACEDS, you should be. And thank you for having us.
Yeah, Mike, any final thoughts?
No, just thank you. It's a short presentation, but we're going to do it every month, and we'll keep hitting the similar themes. So come on back.
Great. We are back October 11th at 12:30 Eastern. Head over to ACEDS upcoming events. Register for the event. It is live on the website. For the rest, for the next 12 months, you can find us. If you have questions, feel free to send them to me, mrivera@aceds.org, or find me on LinkedIn and send them my way, or find someone from the TRU staffing team. We're happy to answer any of your questions, and we will see you next month.
Thanks, everyone.